Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Welcome to another week, everybody. There hasn't been a ton of news out on the market. The big news last week was Sam Bankman-Fried, the founder of FTX, was sent to prison or has been sentenced to 25 years in prison for his role in the exchange's downfall. We've also had some kind of dovish Fed comments. People are starting to realize that we may not have rate cuts until towards the end of the year, and they're going to be far fewer. And we've had, like I said, kind of some more quieter market for the most part the last week or so. But Bitcoin inflows continue. We're excited to see a new quarter start here for us in April. And we'll start by talking about some tokens to get going. So first I'm going to talk about PRISMA Finance. So this is a stablecoin project. It's basically backed by liquid staking tokens, LSTs for short, which I've talked about in the past. So that would be like staked ETH, Rocket Pool staked ETH, Coinbase's staked ETH product. So unfortunately, over the weekend, they suffered an $11 million exploit. So in response to the hack, as usual, the team paused the PRISMA protocol. They investigated the issue, and they're trying to attempt to recover user funds. What was kind of interesting or funny about this particular hack is afterwards, the hacker sent a long message to the PRISMA finance team claiming that they're a white hat hacker, which is basically when somebody steals funds with the intention of returning them as a way to kind of test the system, and they'll accept a bounty in return. But they said they wouldn't return the funds unless unless their conditions were met. The message demanded that the team hold a public press conference and reveal their identities publicly and apologize to users for their carelessness and for allowing the hack to occur in the first place. The hacker claims that the team did not battle test their protocol enough, and this was such an easy issue that they discovered. We don't have the full post-mortem yet, so we don't necessarily know that. The team has yet to respond to this hacker request. It was very unusual. The hacker, though, has started to transfer chunks of the stolen funds to Tornado Cash, a mixing service used to obfuscate the origin of tokens. So a lot of folks don't think that funds are going to be coming back from that, at least as of now. The Prisma governance token has plummeted on this news. It is down 29% for the week. Oop, wrong one. Okay, cool. We will talk about Maker and AAVE next. So on Monday, Maker and AAVE, the algorithmic stablecoin project, and AAVE, the lend borrow protocol, kind of got in a bit of a snafu. So basically, Maker released a proposal that they're going to be potentially allowing up to $600 million worth of its DAI stablecoin into a lending vault for USDE, which is this newly launched stablecoin created by a third project, Athena. So in response, and Athena's only been around for a few months here, so it's not quite as battle tested as like MakerDAO or AAVE are. They've been around for quite a few years now. So in response, AAVE released a proposal on their governance forum suggesting it reduce its exposure to DAI as a collateral asset, basically bringing discontinuing usage of it on its platform, which would result in users being unable to take out loans against DAI or continue to have loans against DAI, in the future. So representatives from AAVE claimed that MakerDAO's decisions are too far down the risk curve and they don't want the lending protocol exposed to this type of risk. The Maker and AAVE proposals, they're still in the early stages. They haven't been voted on, and they're not yet approved. So these are probably like a few weeks off from anything happening. But yesterday's events definitely are highlighting some of the rising tensions between blue chip DeFi protocols and their roadmaps. Like AAVE has taken a very slow, steady risk-averse approach to building their DeFi protocol out, and as a result, been more of a sleepy business. MakerDAO originally had kind of that ethos or that mission in mind, and more recently has been a lot more aggressive in how they're planning out their roadmap and their future iterations and their future products. If you missed it, I think I talked a few weeks ago about their end game proposal, which starts this summer, and it's going to be spinning out different parts of the business, rebranding the whole business, or rebranding the whole project. They're definitely going on a more riskier path. So not everyone aligns with that. And that is just the way that these projects go. So expectedly, AAVE is down 7.7% on the news, and Maker is up 15%. The market likes risk right now. Okay, last up, we will talk about Athena. So I'm sure you've maybe read at some point about Athena here. This is a decentralized stablecoin project. They airdropped their governance token ENA yesterday. So total brand new project. I know I've talked about a lot of these this year on the video here. So the project has been backed by a lot of big investors, such as like Arthur Hayes, who was previously CEO of BitMEX, and other well-known investors such as Dragonfly. They launched in mid-February and already amassed over 1.7 billion in TVL. The protocol basically issues their stablecoin called USDE, and in return, users deposit staked ETH or ETH, and basically Athena uses that to open a short perpetual futures position against the long ETH position. The funding rate captured by the short perp position is collected as yield and then distributed among stakers and the Athena project. This is what's known as the basis trade in crypto. It's very unique to digital assets because in traditional markets, there's not such a thing as a perpetual, like a futures contract, basically no expiration date futures contract. So Athena is able to run this trade right now because the price of Ether is for the most part going up. And so this is capturing like a nice yield that's been pretty healthy. So there's been a ton of criticism of the Athena project. A lot of people have been really worried. Some are even starting to compare it to Luna. But others have also been touting it as like the truly only decentralized stablecoin since it doesn't use any other stablecoins to back it. It's purely ETH backed. But there's drawbacks on both sides. Athena uses some centralized counterparties. Not everything is fully on chain. Again, people are worried, what if the funding goes negative? Then what are you supposed, if the price of Ethereum basically crashes, funding will go negative over time, then what yield are you offering? This trade basically goes away. So only time will tell, kind of how robust this system can be. The project doesn't have an insurance fund to cover periods of when the yield does go negative, but overall we'll see how this one develops in the future. So on the airdrop announcement, they're also announced that they're doing like a season 2 of their airdrop, and they're going to be, and that's going to be distributing the token even further. So far, we don't have the exact number because only about like a third of the airdrop has been claimed, but it's clear that over, several tens of thousands of wallets have been eligible for this airdrop. And Athena token is up 63% since it launched. All right, guys, that's all I have for you this week. I hope you enjoy our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.